move on to our next panel, which is going to be on the security in DeFi, best practices, challenges, and the road ahead. I'd like to introduce the 4 panelists. So first up, we have Harry from Ease, if you'd like to come to the stage, as well as Ricky from Nexus Mutual, Kiril from Bright Union, and Evert from Sherlock. Please give a round of applause. Woo! Yeah, you're going to have to be a little bit comfy on there. So yeah, to start, it would be great if each of you could give a very short introduction of yourself and also your association with DeFi security.
Hello. Yeah. Hi. I'm Kiril. So I'm a co-founder of Bright Union. So we are a protocol that integrates aggregates their DeFi insurance protocols. So basically like 1inch, but for insurance protocols for these guys, where people can choose the best cover for their DeFi investment and the best price and get a little bit of insight what the conditions are and what the payout conditions, etc. So my journey was not really from the. I'm a builder, but my journey was not from the security perspective. I approached from a slightly different angle. When I was one of the first, the fans of decentralized insurance concept. So the concept of insurance business, but being put on chain and working as without any intermediary. And basically where people can participate in insurance business, which has historically been highly profitable. And so we did it for a few years before, and then we noticed that there are some protocols like these guys who are targeting specifically DeFi risks for decentralized insurance. So not life risk, not health risk, but the business for people to secure their DeFi risks. And that's how we came to Bright Union idea, and
cool.
Here we are.
Thank you.
Yes, I'm Evert. I'm working on Sherlock. I'm the co-founder of Sherlock. And Sherlock does smart contract audits, and we're also backing it by coverage. So in case there's still a bug in the code, after the audit happens, we're paying out. I have a technical background. I'm a Solidity developer. And I've been working on Sherlock for the last two years.
I'm Ricky Tan. I work at Nexus Mutual, on-chain decentralized insurance provider. I'm probably the least technical person here on the couch. I had BD and strategy. No joke. And the funny thing is, we all actually work together. Speak with most of these guys almost on a weekly basis. I don't have a background in software engineering. I used to be a commodities trader, but got into crypto about 8 years ago or something like that.
Hi, I'm Harry. I've been working with ETHDam for the past 2.5 years. My background is actually old school crypto from Amsterdam, DigiCash. We used to build stuff on top of Ricky's protocol on Nexus to make the protocol even easier and more approachable for many people. And then we started building our own coverage insurance protocol on insurance, which is built to take away some pain points and make access to DeFi much easier.
Cool. Thanks a lot. And yeah, I think specifically to Evert from Sherlock, congratulations for getting through the last couple of months, the roller coaster that it's been. Which brings me on to my first question, which is generally, there's a big conversation in the space of DeFi versus CeFi. And I'm interested to hear kind of what your opinions are around how DeFi held up compared to CeFi during 2022. And kind of what you see as kind of the main risks of the DeFi versus CeFi narrative.
Well, we sucked, right? I mean, we as a DeFi, we went down drastically, right? I'm glad to see that CeFi actually also, risks in CeFi also increasing. We see that now really clearly. Risks in DeFi still unknown. Still high. That's why we are here. That's why we are doing business on.
Yeah, I think DeFi, of course, has like an extra risk with the smart contracts and the decentralization, and that everyone can access it like at every time. With DeFi, it's a little bit more protected in the terms that you have to go to like a human to access DeFi sometimes. So there's like a lot of phishing happening, and that kind of attacks. Those attacks can also happen on DeFi, but yeah, I think DeFi has that extra risk because it's so open.
I'm just going to piggyback and back on top of this up. But yeah, it's the thing with CeFi, and especially with like, you know, the FTX bankruptcy and all the other exchanges that kind of went under. With CeFi, you actually know how you're going to get screwed in the end, you know? It's kind of like, okay, someone's either going to commit fraud, someone's going to steal your money, someone's going to lend out your funds without you having given the permission, and it's just opaque and you don't know, and at the end of the day, you just lose your stuff. In DeFi, like, obviously we're very proud that in DeFi everything's transparent and you can track it on chain, but the thing in DeFi is just like the unknown unknowns, which is partially like why we exist. But it's also what makes our job now more difficult, because as the whole composability aspect is still, you know, still increasing. People are building on top of each other, layer over layer. So your unknown unknowns actually increase exponentially. So you can have, I mean, this was, for example, the case with Euler. Euler, 10 audits, but 20 different integrations, different layers. So at one point in time, one thing breaks and the rest just like goes under. And that's just an example of, you know, on the surface, you might think, oh, this is a legit team. I trust them. They've gotten 9 or 10 audits. That's nice. It's safe, but it might not be as safe because there's just so much stuff that you just can't grasp, essentially.
Yeah, and I think it would be great, like over time, if we get to know like all the unknowns. But like people keep developing new protocols, people keep like building on top of each other. So it seems like for the initial period, those will only increase like that complexity and those unknowns.
Yeah, I agree with my colleagues here. The composability is a risk, but in the end, we are still building in prod the entire system. And I think looking back at the total DeFi TVL and all the stuff that's going on, it's actually not that bad. All the hacks have taken place. Most of them were breaches. And if you take out the breaches, then I think
it's 2 billion?
Less than 2 billion, which is about the amount that people just in the UK lost on phishing scams, non-crypto. And much less than, for example, Deutsche Bank had to pay in fines for their role in the 2008 system. So you should think about TradFi versus CeFi, FTX, of course, versus DeFi. And I think we're doing quite well. And we're learning from every little hack, every big hack. We learn a lot. And I think this group of people here, we've built our own little ecosystem within the ecosystem to protect users. And I think that's very good.
Yeah, on that note, I think I did hear from Evert recently about what happened and the fact that when there is a hack, there's a war room. Can you maybe talk a little bit to that, kind of how the industry, despite you kind of being competitors in a way, how in those situations you actually come together and work together?
Yeah, sure. So the war room is when an exploit happens, or it's happening still. People come together from all different teams, some security teams. We've been in the war room a couple times, protocol teams, and we just discuss like how to mitigate the ongoing exploit or try to figure out what's happening. And in those times, like everyone wants the best for the space and to figure out what's happening and to mitigate the attack. Because sometimes an attack can happen, and it can also apply to other protocols that are still like vulnerable. So during those times, everyone comes together and tries to figure it out, and that's when the best comes out of everyone.
I would add that So now people understand that the DeFi risk. It's always been a case, of course, right? But we know that all the DeFi users are kind of self-selected for being to have a high risk appetite, right? So we've seen that in the previous presentation that most of people, crypto-friendly people, they have like, what, 85% of their wealth exposure in crypto. So, but the funny thing is that every hack that happens is actually, in a way, good for us, right? Because we are doing DeFi Insurance, right? So we are live for a couple of years now, and when I was explaining like a year ago to people like, well, you know, guys, well, we all know the risks are freaking high, right? That maybe you should have if you have such a massive exposure to DeFi, one way to mitigate the risk is to buy the freaking DeFi cover, right? And then when I was doing this a year ago, even then, people like, what, DeFi Insurance, what is that? Is it going to be paid out? Or what are going to go to return? How do I submit a claim, et cetera, what the conditions are? Now, actually, after all this older cream and FTX and all this shit like that, it's much easier to sell. Basically, I think all of us are seeing the race of DeFi cover sales. So people try to understand it better, the risks are, and the way that DeFi cover might help to mitigate the risk. So good and bad.
Yeah. Could you guys maybe add on to that, and specifically talking about DeFi cover, what really is the main limit to adoption of DeFi cover, like at this moment in time? Because ultimately, from my perspective, and I guess many people's perspective, it is kind of really one of the few things that you can do to truly, quote unquote, de-risk your DeFi participation and protect against all the security threats.
I'll start again, sorry. So there are two issues, right? So in decentralized insurance, there are two aspects where people can participate. They can buy the cover, or can they provide the capital to basically to cover the risk for others, right? And both of those sides have some challenges. When the buyers basically, why there is no massive adoption? I think it's like only 4% of all the TVL in DeFi is covered by insurance. 4% is almost nothing. The issue, I guess, is, well, gas cost, of course, but UX sucks because when you put your money in Maker, Compound, or whatever, you need to recall that you need to go to one of those guys or to us and to buy the cover for the limited amount of time, etc. So it's way too far from the actual users. Comparing to, let's say, when you buy the flight ticket, right, and there is a checkbox, small checkbox, like insure my luggage. So it must be like this. So, but it's coming, it's not there yet. On the opposite side of liquidity providers, the biggest issue is that the risk is kind of unknown, right? Because as a liquidity provider, you act as an insurance company, right? You provide the capital, and then you can expect that this will be my yield, and these are my risks, right? So, but in general, it should be bringing me some money, right? But if you go to any traditional insurance risk modeler and say, guys, can you calculate, please, what the risk of Maker or Compound being hacked? They will say, okay, give me the data that you have. And when you give the data that is available now, they say, well, you cannot calculate this freaking risk. It's way too early. It's well unknown. So that's, and I think many of people here are struggling with the capacity, right? So selling is not this complicated anymore, but the capacity is the issue.
Yeah.
Well, not for everyone.
Exactly.
Thank you.
Don't drop the mic.
Well, we built a system which is basically unlimited capacity, as the deposits are the capacity. So that's why we built a new system also to take away one of the other pain points, which I think is cost. It's easier in a bull market when every little protocol has like 50, 60, 80% APY of a few thousand to spend a few percent on cover, which just makes sense, even if you're in for just a few weeks. But in a bear market, where maybe you get 0.5% or 1.2% return, then it's harder to justify the cost for a lot of people. We haven't had any hacks in the past 30 months, so we haven't had to do any payouts. It works differently in our system, but we also haven't charged any fees. So people had 30 months of free coverage. I think that's one of the things we should focus on, lower cost. But in general, I think all the systems we represent work very well, but we need to get more education. It would help a lot if the big protocols themselves, all the protocols that have cover available in one form or the other, just point to the users and you can invest, but you can also get coverage, either directly via the protocol or just send them to us. I think that will help a lot.
Yeah, I think the end game with DeFi Insurance is, if you, and as Kiril mentioned, like from a product perspective, you want to be as close to the customer as possible. So, there's not a lot of integrations out there right now where a user can just like purchase a cover when they deposit their funds with any of the lending protocols, et cetera, et cetera. But I think the absolute end game is actually when the cover is completely embedded, because that's the one thing that smart contracts do allow, is that when you want to get to the stage where if somebody deposits money into Compound or Aave or whatnot, that the yield will automatically pay for the cover. And it'll do that on a block-by-block basis, because if everything is composable or DeFi, it just means that you can do these things which in traditional finance are actually not possible. But that's part of that's still a matter of the tech stack all being slightly different, the BD teams having to work together to see the long-term case for these types of integrations, et cetera. And I think also, so that's on the product side. On the user side, I really relate to the previous presentation, where most of the people in DeFi are just very advanced crypto users, and excuse me for my French, but they're just fucking cocky. They really think like, I'm gonna put my money into this new lending protocol that's spun up on this new L2, and I'm gonna make 10%. If I then, and I've done these user interviews, if I ask these people, all right, would you be willing to pay 2% to cover it? They say, fuck no, I want it all, and I'm smarter than the rest of us, and I'll just be in and out within a couple weeks or a couple of months, because I'll find the next thing, So they hop from degen thing to the next degen thing, and at one point in time, they get hacked. And then if you then speak to them after the hack, they're like, yeah, I should have bought cover. And I'm like, no shit, But that's still just that's what the typical DeFi user looks like. Like they are a bit audacious, they are very risk-seeking, and a lot of them truly believe they don't need cover. So,
yeah.
Yeah, I tend to agree with the user there. But I want to your vision of like the long-term end game of coverage. I think I don't agree with that, because if you bake it in the coverage in the contract itself, it also is exposed to like risks, of course. So you have to cover like those risks of like the automated coverage as well. Like how do you think about that? Do you think that needs to be covered in some way as well, but like traditional insurance or?
That's actually a good point. Like you basically need another form of reinsurance on top. Yeah.
Well, you can still reinsure everything, of course. It's what we're doing with the system at the moment as well. But yeah, I recognize that the basically two types of users. At the moment, all the power users are cocky, as you said, and think they don't need insurance, while they likely do. And there's a big group of people, and especially new entrants, that's also why the previous presentation was very good, that find it too difficult. I mean, there's a reason we call ourselves Ease now, because we need to make it easier for people. We're actually going to sell easy tokens, which are covered yield-bearing tokens directly. So people can buy them with ETH or stable coins and just don't think about all the steps in between, and get covered and just get a return on their investment without all the headaches. So I think we should make it easier for everyone.
Cool. Makes a lot of sense, and thanks for also disagreeing. I appreciate that. Yay for composability was my thought. Yeah, guys, I'm gonna to the audience and the people on the live stream, I'm gonna be asking questions from Slido in a second. There's already one great question that happened, which is about an event that happened maybe less than 24 hours ago. Always happens with these sorts of panels. So yeah, the code here is 3232 on Slido. That's 323232. The last question, I guess, that I have is, from your guys' perspective, what really are the biggest security threats in this moment in time?
Unknown yet. I mean, see, so what happens? So we see the great evolution of the security tools for developers, right? There's been so many told over the past day here even. So there are many tools which help you to make much more secure code. So it's improving. However, there are new techniques also appearing, right? So there are cross-chain bridges, there are cross-chain liquidity, there are new types of oracles, et cetera, et cetera. So I'm afraid that what we see is that the security tools are improving, but the new features, new ideas appearing at much faster even. So we're never gonna catch up with the new methodologies, new tools, etc. So the risk always will be there, and the next big thing or big risk is unknown yet.
Yeah, I think if you look at historically, like 2017, like all the hacks were like very simple, like checks that could have been mitigated. So I think if you look at that way, we have made good progress, because right now most of the hacks are more complex and more complicated, where you use like cross-chain, of course, like protocol reentrancy and those complex attacks. So I think that's a good trend, that the exploits are getting more complex. But yeah, of course, you don't want any exploits to happen, but I expect the space to get better in catching these exploits, and then maybe there's some end game where we've figured out all the complexity. But as Kiril said, like, yeah, developers like to get more complex as well, so it's a game of playing catch up mostly.
I think one of the biggest risks right now is basically a human aspect to the industry, where we're basically going through. We've had a big market correction. Luckily, a lot of the junk has been washed out. The bad actors are gone. But at the same time, yeah. But at the same time, because we're going through a bit of a lull, I think a lot of teams are at the risk of basically lowering their guards, because they might not be reviewing their older code that much. They might forget about certain pockets of liquidity that they still have in not a completely deprecated version, but like, if you switch as a protocol from V1 to V2, there might still be some liquidity in V1 that has not migrated yet. And as their focus just shifts to their newer thing, they forget about kind of like the older code and stuff that's actually, as Evert said, like fairly easy to exploit. And I have this sense that right now you'll see this wave of very targeted attacks, like on older parts of the DeFi world, where people were like, oh, that's actually a very simple hack, but yeah, I was just not looking at it anymore because it was old code. So
yeah, we also do bug bounties ourselves. I mean, we find bugs, and we found quite several of them in older code, which are either still active or forked by other protocols, which is another risk, that people just blindly fork protocols and not check back. The human aspect is very important. Also, by a lot of teams are a bit cocky as well. I like the word. They should go more often to protocols like Sherlock to have their code audited by many more eyes than they do now, not just by some auditors. I really like the protocol. We work with them as well. And one other thing, the human aspect is probably a nice bridge to your next user question. I think I discussed it yesterday with a few people here. DAO hacks. I think that's a big risk coming up. Some of these DAOs that control a lot of money are sometimes controlled by one or two wallets. And even if you trust the two people who are in control of those wallets, they can still be hacked, socially engineered, and what have you. Or just do a rogue vote, like what happened last night. So I think that's a big risk factor.
Yeah, so that's a good shift into what happened last night. So for those that might not be aware, there was a governance attack on Tornado Cash, where Tornado Cash has obviously been a huge topic yesterday. I find the timing absolutely obscene, given how much this happened yesterday, like how much we spoke about Tornado Cash yesterday. And yeah, obviously this is the panel today on DeFi security, so I'm not sure if you guys have read into it at all or seen what happened, but very interested in your hot takes on what happened last night and kind of what the consequences might be.
Yeah, I think for first of all, for a protocol like Tornado Cash, I think governance is not really a good feature. You want it to be like on there without any factor for like a governance attack, as happened last night. So I think that might be seen as a design flaw. I think to the attack specific, I think they approved the code. It's like, oh, this looks like a legit feature or legit update. And then there was some way to drain all the tokens or something. Yeah, so bugs like that should have been caught like by an auditor in case it was audited. So that's, yeah, it's a really shitty situation, but yeah.
Yeah, I think, as I said, the DAO systems should be discussed more carefully, maybe a theme for next year, because there's so many aspects to that, including all the voting. I mean, the guy just basically proposed a vote with an exploit in it, and it got approved. So people didn't look carefully enough at the vote and check what actually was going to happen, and then it was too late. Which is a attack factor which is probably possible with many, many protocols. So I think it's something to learn from.
Yeah. Ricky, anything to?
No, I actually had to ask Evert earlier what happened. It was my birthday yesterday, so I was celebrating.
Congratulations.
That, so.
Cool. Well, I have one more question here, and then we'll call it a wrap. Does DeFi Insurance, DeFi Cover, introduce another layer of auditing and therefore also improve the security of the system in that way? I think we might get some different explanations.
Yeah, I think when writing coverage, like when actually covering a protocol, you have like a very high incentive to actually make sure no exploits happen. So yeah, you can also switch it around. Like if you write coverage, there is like an incentive to not pay out. So I think that's like you're reversing the dynamics there, but yeah, that's a cool way to look at it, I think.
Yeah, I'm not sure that, I mean, you know, just because it's insurance, it acts differently, right? So if you insure in your car, I'm not sure you're really actively reporting to BMW, Mercedes about the bugs and feature or bugs you noticed. So I think it tackles, it helps the end users for sure. Whether it makes really the space safer, yeah, Sherlock, they do it, try to tackle it from that angle. But in general, I think it's slightly different mission for insurance.
Yeah, I'm basically, as Harry and Evert basically mentioned, I'm a fan of kind of like the Sherlock or Code Arena style bug bounties. I actually think that the average quality of the, let's call them the centralized auditors, the audit quality has significantly declined over the past years. In terms of the cover providers, like us here on the couch, I think one of the things that people forget is, you know, yes, we're here to secure the whole landscape, but as a result, it also means we can't ship too fast and too ruthless. So people often complain, like, why are you not implementing feature A, B, C? Well, it's because we need to make sure that our own code is basically secure. So you tend to see that the cover or decentralized insurance protocols move a little bit slower than, you know, a new perp exchange or whatnot, but that's with a very specific reason in mind. So,
yeah, definitely. And to answer your question, I think it really gives another layer of security for the users. I mean, we have a few very smart guys in our team that check all the protocols, do bounty hunting, not just for the bounties, but also make sure that any protocol we put into our coverage system is checked again, and not just some 5-year-old audits. And we did find even bugs, and some very big bugs in some blue chip protocols that are covered everywhere. So yeah, I think just the knowledge companies like ours have will make the space safer, not just the products themselves, but the knowledge that goes into it.
Cool. Well, thank you so much, guys, for coming today. And yeah, hope the audience, you got something out of that. We obviously touched a lot on DeFi cover, which I'm very happy about, actually. So yeah, thanks a lot, guys.
Cheers.